Morning traders, I'm doing a global macro update. Just getting some pretty good moves in bonds off the lows this week, and then I like what the euro and the dollar's doing in line with our dollar bullish thesis that we've been dollar bulls all year. It's been a good call. But going forward, I want to stay with that. I think October is going to be pretty volatile. We can talk Bitcoin here, but I like to start with get the dollar right. You're going to get a lot of other things right in markets. Dollar index. I'm going to kind of go fast. This is what we call a top-down directional approach to how we view things. So our model's fractal in nature, meaning it's not one thing, it's multi-dimension. We're looking at multiple time frames. And when we talk about the monthly cycle, this is still a long-term bull market. The bands broke out here 2014 and clearly got above our pie line. You broke this high. This was the first move up in this new long-term bull market for the dollar. I think we got over the next several years a much larger rally ahead. So this is the first move up. We had some nice cycles here to take advantage of. And then this was a pretty tough move. I mean, we made higher lows. We moved to a new high from this higher low right near the 30. Again, this is a monthly chart. And then boom, we had a nice pullback all the way back to the bands. And here was tricky because breaking the bands in our model was a sign of caution, but we did have the 200, which a lot of big traders have on their charts. So sure enough, the market held the 200, and now we're back into bull mode. So you can see if this is the lows that we broke out from, this is a higher low relative to here. So the market hasn't done anything wrong from a long-term bullish perspective. So that's the time frame that we're considering when we say we're long-term bulls on a dollar. When I look at the weekly, I mean, if you just step back, you could see more of the same. I mean, I loved how we consolidated here for several years. And then this is all the start of a new uptrend. You can see even the 200 has curled and turned up. Our pie line has turned up. This is all indicative of a bull market, long-term bull market. And so on the weekly level, we held pie. You had a lot of traders wanting to get short just because they're staring at the 200. They don't care that it's rising. You just take out these lows. These guys want to short. Not in our model. We were been buyers here, and for the market to turn up, we made the call that this was the start again of another rally in the dollar. Great move. And then most recently, we just held the 30 in the bands again. So the dollar hasn't done anything wrong in our view. Here's a daily chart. I've got some support drawn. We did break the bands. Again, that was a little bit of sign of caution. Maybe we were going to come back here to 92, 92 and a half. On the euro, that was maybe we would see 119, but that looks like to be gone now. Looks like that cautionary view getting above the bands here. Getting above this high. There was some room that maybe we would squeeze all the shorts to this area. But you can see when I do the top down on the euro here in a second, this is still a long-term bear market, even if we traded to 120, 121. I know that's hard to stay with. You got to play defense. You can't just be forced short from 115 and drag that all the way to 120. But I'm saying that, I mean, we didn't get above this high on a closing level. We didn't get above this high from June. The pie line was here. So this area would have coincided with a move back to here on the dollar index. And it looks like all we did here was just hold this support and make another higher low relative to here. I think we're going back to these lows. I think we're going back to these highs, maybe even a higher high. That's my view on the dollar index. Now I'll throw the euro right next to this. Right here, and we'll just do the higher time frames. The monthly, again, this is our view. Euro versus the dollar, we're long-term bears. You failed at the top of the regressions, there's 2 standard deviations. Every time we get to the bottom of the long-term risk range, you want to be taking some profits. We revisited the top of that this year, 125. We're back in this down cycle. Now the monthly cycle is low. I've highlighted that before. But look at, we still haven't been able to take out the prior month's high on a closing basis. That we call that a swing line. You can draw it real quickly. Have time to teach it. But all we're doing is each candle is lower than the previous month's candle. That's all confirming this bearish action. Now this monthly cycle can come up, but it could just as easily stay down here. It's just one factor. When you look at the weekly level, man, same thing. Bearish, nothing but lower highs. Failed right at the 30-day. That's descending. That's pretty classic in our model. Got a weekly cycle that's crossing, which tells me we could see a lot more downside here on the cycle into October, November. That's what it's setting up here. We got a bearish engulfing right here on this. Lots of reasons to be getting more bearish and longer, more bullish the dollar now. The daily chart's showing very similar. Failed at the top of the regression. We took out these lows. We took out the 8 here. This 117.26 was big, and then bam, got a lot of follow through the last 2 days. The 4-hour, same thing. Had a couple inverse head and shoulders up here. Technicians are going to be spotting, talking about that. Here was your neckline. This was prior resistance. That then became support right here, and then we broke that. So this is a little BCI in our model. Kind of marks the halfway of the move. I think we'll test. This is kind of a big spot, 115.5, the closing level on the weekly. And if we get through there, then we can start talking about these levels again. So from here, we're still course short. I want to stay that way. Any rally back, you can sell into it. Just got to time it up with your cycles. But that's the game plan on the euro. Stop back. Dollar yen is high. I think the yen is pretty high. I mean, we talk global macro. Stocks are kind of high. Yen looks pretty cheap. So when you look across, whether it's pound yen, dollar yen, I think you would want to be a better buyer of the yen. Our view is that growth is about to go from really great numbers, some record consumer confidence, record GDP quarters, consecutive quarters. What is it, 8 in a row? So the numbers are great, but when the numbers go from great to good, that's still slowing, guys. That's not as the number good or bad. Is the number getting better? Or is the number getting worse? So GDP, U.S. growth starts to go from great just to good. That's slowing on the margin. We want to cyclical guys we care about on the margin, relative. Is growth slowing on a relative basis or accelerating? And this is slowing if you go from great to good. So you might have that coming in here in the fourth quarter. You're going to see you could have a lot of the data surprise people, and that's one of the reasons why we like being long bonds. And we have great calls on being long bonds this week. This is a contrarian play. A lot of people are chasing the Fed's tail, thinking that, oh yeah, well, we got X amount of more rate hikes. We got X amount of dot plots getting pushed out, blah, blah, blah. We haven't broken out the levels on yield, and you got to get growth right. Growth right, big picture, global macro. So down here, we've been buyers. We were buying 139.23, 24. I mean, typically we don't like buying lower lows, but this was a view I thought was contrarian and it made sense. So we were adding to our core longs down here, and then we've been taking profit. I sold this morning right into this prior high in the bands. So we'll be better buyers on pullbacks. I want to stay with that in treasuries. Plus, you have a net positioning that is super crowded short in the 5-year sector across the treasury bond space. Everybody wants to be short. I think there's a huge potential for a squeeze, and so we're going to be better buyers of the long end. That's been a good call this week. So we're setting up as risk off, growth slowing. We want to be dollar long bulls or dollar bullish. Treasuries we like. Haven't shorted stocks. That's not been our call. We've been on the long side, but we're starting to say, hey, there's a lot of reasons to be cautious up here being long equities. Right now, we care about this prior high, 2870 area. You start to kind of come back down through that, you're going to have a false breakout type of longer term situation. And there's good reason to think maybe we retest some lows from January, especially if you get growth surprise and we start to slow. That's when a lot of bad things happen. And then, so we'll expect volatility to pick up. So we're watching these lows. Dow futures haven't been able to get above these highs. So lots of reasons to be cautious. If we look at the VIX, stocks start to roll over. If we have risk off, we should see the VIX start to change its structure, and we've been making higher lows on the VIX now, which makes me think, I think coming into the midterms, growth slowing, there's a lot of reasons to see a lot of volume or a lot of volatility October, November, December. So I kind of expect vol to be in the high teens, maybe even 20s if that plays out. So we've been kind of better buyers of volatility when it gets cheap, when stocks get high within their risk range, they get the top end of the range. We want to be to buy some vol, etc. And then lastly, I'll just hit on BTC. Pretty quiet. I'd like to see maybe we've been focusing on that 8.6 cycle coming off the highs in December, January. So that puts us into September, October. Literally August, September, October, depending on, it's not an exact science. But this wedge is narrowing. We have so much obvious kind of coiling or just narrowing of this range. And it's not going to take much here, guys, for us to start to really break out if we start to make higher highs. But that's the key that we're watching, this trend of lower highs. Not a whole lot to do here. You can notice we're in the middle of trend line and the floor of support at 5,800. You're right smack in the middle. Not a whole lot to do. The latest moves I've made have been just a couple hedges on the 4-hour. Here we came out of some longs and then short here, covered bottom of this 4-hour cycle down here. That's it. I haven't put any. We did add to some alts down here, and then we came out of some of that stuff on this last move up. But this was probably, we had the crossing of the daily cycle this week, so it was kind of, we were thinking it's a down week. We haven't really seen price go anywhere. Yeah, so to reiterate the big picture levels now, still a 7,400 pivot, 5,800 on the downside. Other than that, we're just kind of trading it small in those levels. All right, hope this helps. Hope you guys had a great week. Maybe I'll try to put out some month-end analysis on crypto and maybe global macro. Hope everybody has a great weekend.